In Nigeria today, the term mutual funds is more than a buzzword. It's becoming a financial lifeline for many people. The country's economy has been challenging lately, with a high inflation and a volatile naira eating away the value of cash. Rather than watching their money lose purchasing power, Nigerians are increasingly turning to mutual funds as a safe and effective way to grow and protect their wealth. These funds pool investors' money into portfolios of stocks, bonds, or other assets, offering a level of stability and growth that's hard to achieve by stashing cash in a bank account. So in short, mutual funds have emerged as a crucial tool to navigate tough economic times. One clear sign of why mutual funds matter is their explosive growth in recent times. According to data from the Securities and Exchange Commission (SEC), the Nigerian mutual fund industry attracted about 1.99 trillion naira in net inflows in just the first half of 2025. The total industry assets under management surged from roughly 3.98 trillion naira at the end of 2024 to 5.98 trillion naira by mid-2025. A remarkable 50% growth in just 6 months. This isn't just a statistic, it signals that more Nigerians trust mutual funds as a place to put their money. In fact, over the same period, 18 new funds were launched, rising from about 187 to 205 SEC registered funds. And I believe that this is highlighting investors' demand for these products. Such robust growth reinforces the appeal of mutual funds to investors who prioritize stability, liquidity, and competitive returns amid a volatile macroeconomic environment. In other words, as the economy sees ups and downs, people see mutual funds as a reliable shelter for their hard-earned money. What's driving this trend? A big factor is that mutual funds offer attractive returns even in a high interest rate environment. For example, money market funds, which invest in low-risk instruments like treasury bills, have become the go-to choice for risk-averse investors. That's investors who don't want to take so much risk. These funds took in the bulk of new investments recently, more than doubling their asset size from 1.68 trillion naira to 3.14 trillion naira by mid-2025. And I think the reason is simple. With interest rates high to combat inflation, treasury bills and similar assets are paying generous yields, and money market mutual funds let regular people earn those returns. Instead of leaving cash idle or in low-interest savings accounts, Nigerians are using money market funds to beat inflation and keep their savings growing. Another reason mutual funds are booming is the need to protect against currency inflations. The naira's volatility in recent years has been a headache for anyone holding all their assets in local currency. Mutual funds provide an answer here too. Many fund managers offer dollar-denominated mutual funds, which allow Nigerians to invest in assets tied to the US dollar. These dollar funds have seen increased interest as people look to hedge against exchange rates risk. In an environment where the naira can slide in value, having some savings in dollar mutual fund can safeguard one's wealth. And I think this flexibility, where one is being able to choose funds that align with one's concerns, be it inflation or currency risk, makes mutual funds especially valuable today. Mutual funds matter not just because they yield profits, but also because they democratize investing for the average Nigerian. You no longer need to be a millionaire or financial expert to invest in stocks, bonds. A mutual fund opens those doors for you. In fact, many mutual funds have very low entry requirements. Investors can start with relatively small amounts of money, sometimes as low as 500 naira, yes, you heard me well, in a certain fund. With even a few thousand naira, the price of a dinner date or a pair of shoes, you can become an investor. Yeah, this level of accessibility is game changer. It means a young professional, a student, or anyone with a bit of savings can put their money to work in the financial markets. Instead of letting your money sit idle and possibly lose value, mutual funds let you join the investment game with just minimal capital. And I think that this is a key reason why they matter. They break down barriers to entry, allowing more Nigerians to benefit from opportunities that were once reserved for the wealthy. Another critical critical aspect is the professional management and diversification that mutual funds provide. When you invest in a mutual fund, you are effectively hiring the professional fund manager to handle the heavy lifting for you. And these people are experts who analyze the market trends, select investments, and adjust the fund's portfolio to manage. For someone who doesn't have the time or know how to track the stock market or bond prices every day, this is a huge advantage. The fund manager's job is to make sure that your money is allocated smartly, and they have access to research and tools that individual investors often don't have access to. Equally important, mutual funds offer built-in diversification, which is a cornerstone of safe investing. Because a mutual fund pulls money from many people, it can invest in a wide variety of assets, different stocks, bonds, or even real estate all at once. This means your money is spread across many opportunities. If one investment in the fund doesn't perform well, it's not the end of the world, because losses in one area can be offset by gains in another area. This spreads out risk and smooths out the ride for investors. For example, a typical Nigerian mutual fund might hold a mix of bank stocks, government bonds, and perhaps some money markets instruments. If banking stocks have a bad month, the government bonds in the fund could still be paying interest, keeping your overall returns steadier. Achieving such diversification on your own would be costly and a bit complicated. You would have to buy dozens of different securities for that. But through a mutual fund, even a small investor gets a piece of a broad portfolio instantly. This is a major reason mutual funds matter. They give everyday people a simple way to invest wisely without concentrating all their bets in one place. In a country where people have seen dubious investment schemes come and go, the trust factor of mutual funds cannot be overrated. Mutual funds in Nigeria are strictly regulated by the SEC, which is the Securities and Exchange Commission, which means that there are rules in place to protect investors. Fund managers must adhere to transparency and reporting requirements and act in the best interest of their investors. For instance, they have to publish regular reports showing where the money is invested and how the fund is performing. The SEC also ensures that funds disclose their fees and follow the terms set out in their prospectus. And in my opinion, this oversight builds confidence. By choosing SEC-registered mutual funds, investors can have peace of mind that their money is being handled responsibly and under watchful eyes. In an era where scams and Ponzi schemes have caught people off guard, having this level of regulation is precisely why mutual funds stand out as a trusted option. They offer a level of safety and credibility that is crucial for widespread adoption. Moreover, mutual funds bring a level of liquidity and convenience that matters to investors. Unlike buying a plot of land or locking money in a long-term fixed deposit, mutual funds investments are relatively easy to get in and out of. If you need your money back, many funds allow you to redeem your units on any business day at current value, which is known as the net asset value. In this case, there's no need to hunt for a buyer as you would in maybe if you bought a real estate property, and no severe penalties as you might have with a fixed deposit if you withdraw early. This flexibility means that your money isn't just trapped. You can respond to emergencies or new opportunities as they arise. Knowing that you can access your funds relatively quickly makes people more comfortable investing in mutual funds compared to more liquid investment. And this is one reason why personally I love to put my money in mutual funds. Mutual funds doesn't just matter to individual investors. They also have a positive impact on Nigeria's broader economy. When you invest in a mutual fund, your money doesn't just sit idle. It gets channeled into various sectors of the economy. Mutual funds buy government bonds, which is funding public projects, invest in companies, providing capital for businesses to expand, and even support initiatives like infrastructure or real estate development. In doing so, mutual funds contribute to job creation, infrastructure development, and overall economic stability in Nigeria. They serve as a bridge between personal savings and national development. For example, if a mutual fund buys a significant amount of a company's corporate bond, it's helping that company build a new factory or launch a new product, which can create jobs. Or when a fund invests in treasury bills, it's effectively lending money to the government to spend on infrastructure or services. So by investing in a mutual fund, you are indirectly helping to drive growth in the economy. It's a win-win. You seek returns on your money, and at the same time your investment fuels productive activity in the country. Finally, mutual funds matter because they encourage a culture of long-term financial planning and wealth building. In the past, many Nigerians stuck to traditional savings or tangible assets like real estate or gold. While those have their place, they often require large sums or just aren't flexible. Mutual funds offer a modern path to building wealth gradually. You can start small, stay consistent, and let the power of compounding work for you over time. As the funds earn income and gains, those get reinvested to generate even more growth. Over time, this can significantly boost your savings. This is particularly important for young people looking to secure their future or for families planning for goals like children's education or retirement. Mutual funds instill the habit of investing regularly and thinking long-term. In summary, mutual funds have become an essential part of Nigeria's financial landscape because they address so many of the challenges and goals that investors have today. They provide a pathway to beat inflation, diversify risk, and invest with expert guidance, all in a regulated environment that safeguards your interests. Mutual funds are fueling financial inclusion by making investing accessible to almost everyone, and they are contributing to the country's economic progress by mobilizing domestic savings into productive use. As Nigeria's financial market continue to evolve, mutual funds are poised to play an increasingly significant role in helping Nigerians achieve their financial aspirations. If you are looking for a smart way to make your money work for you in these uncertain times, mutual funds are certainly worth considering. That's why they truly matter in Nigeria today. Alright, that will be all for now. Thanks for watching this video. Please don't forget to like and share to someone that this could help. Again, I'm looking forward to seeing your comments in the comment section below. Till next time, bye for now.